Welcome to the Deep Dive. Today we're taking a deep dive into real-world asset tokenization.
RWA tokenization.
It's a really transformative force. Seems to be bridging, traditional finance, TradFi,
Right.
with the whole DeFi, decentralized finance world.
Exactly.
So our mission today is basically to distill what this means, why it's getting so much buzz, and, well, what it could mean for finance going forward.
Yeah, absolutely. And at its heart, RWA tokenization, it's pretty straightforward conceptually.
Right.
You're taking assets, real world things, tangible, like real estate, or intangible, like say intellectual property,
Right.
and converting them into digital tokens on a blockchain.
Okay, so digitizing ownership, essentially.
Precisely. And the big appeal, bringing those often illiquid assets, things that are hard to buy and sell quickly, onto the blockchain.
Making them more accessible, manageable, maybe more dynamic.
That's the core idea. Yeah.
And it's important for you listening to get that this isn't just like some niche tech thing anymore.
Oh, definitely not.
This is growing fast, right? Especially now, late 2024, heading into 2025. It's happening.
It really is gaining significant traction.
So, okay, let's unpack it then. What exactly is RWA tokenization, and why is everyone suddenly talking about it? What's driving this huge interest?
Well, a lot of the momentum comes from how RWA tokenization tackles these long-standing inefficiencies you see in traditional asset markets.
Like what specifically?
Things like enabling fractional ownership. So imagine a huge building.
Yeah.
Instead of one person owning it, you can divide its value into many small digital tokens.
Ah, so you could buy just a small piece. It's more affordable.
Exactly, more accessible. And that directly boosts liquidity, makes it easier to trade. Plus, you get enhanced transparency.
Because it's all on the blockchain, that immutable ledger thing.
Precisely. Every transaction is recorded, can't be easily altered, creates a verifiable history, so it opens things up for a much broader base of investors.
So it could unlock, like, literally trillions.
That's the potential, yes. Trillions of dollars currently locked up in these less liquid assets. And then there's the appeal of programmatic management.
Meaning?
You can automate certain actions, plus lower admin costs, and the big one, 2047 global trading.
Right, unlike traditional markets with their opening and closing times. Okay, here's where it gets really interesting for me, the numbers. The projections seem pretty wild.
They really do highlight the market conviction. Take Deloitte, for example.
Yeah.
They're predicting something like US $4 trillion in real estate alone could be tokenized by 2035.
4 trillion, just in real estate.
Just real estate. Compare that to less than, what, 0.3 trillion in 2024?
Wow.
That's a compound annual growth rate, a CAGR, of around 27%. It's huge.
And the total market already?
The total volume of tokenized assets, it topped $16.7 billion in 2024, and some forecasts are pointing towards maybe $50 billion in value in 2025.
50 billion next year. Okay.
And another interesting point, non-stablecoin tokenized assets, they grew by 53% in 2024.
So it's not just about tokenizing currency equivalents, it's expanding into other assets too.
Exactly. Shows broadening use cases.
Numbers like that, it's no surprise the big institutions are paying attention. Who are the main players leading the charge here?
Oh yeah, you're seeing serious movement from the major financial players. JP Morgan, BlackRock, Goldman Sachs, Standard Chartered. They're all involved.
Actively exploring or actually doing things?
Both. UBS, for instance, they launched something called UMINT.
UMINT?
Yeah, it's a tokenized US dollar money market fund right on the Ethereum blockchain.
Wow, directly on a public chain.
In Standard Chartered, they launched a tokenized US Treasury fund over in Singapore.
Another practical example.
Definitely. And beyond just the banks, you've got government-backed initiatives too. Singapore's Monetary Authority, the MAS.
Right, Project Guardian.
That's the one. They've been piloting tokenized bonds, deposits, funds since 2022. Shows real regulatory engagement.
So governments are involved, trying to figure it out.
And Dubai's land department, they kicked off a real estate tokenization pilot early in 2025 too, so widespread interest.
Okay, so we've got the concept, the scale, the big names involved. Let's bring it back to the listener. What are the tangible benefits for you? What does this really mean for potential investments or just the financial world you interact with?
Right. For you and for the financial system generally, the benefits are pretty clear. Better liquidity, like we said, lower transaction costs, significantly lower in some cases.
Faster too, asset transfers.
Much faster, yeah. And simpler compliance processes, potentially.
How does it simplify compliance?
Well, having everything on a transparent, immutable ledger can streamline verification and reporting.
Yeah.
But the big thing for individuals is breaking down those large, illiquid assets.
Commercial buildings or private equity funds, maybe.
Exactly, those kinds of things. Into smaller digital units, it really could broaden access to investments, potentially democratize wealth creation that was, previously only for a select few.
That idea of democratization is powerful. But is this whole concept completely new? Or is it building on stuff we already had in traditional finance? Is there historical context?
Oh, it definitely builds on existing ideas. Fractional ownership itself isn't new.
Right, like REITs.
Yeah.
Real estate investment trusts.
Exactly. REITs or mutual funds are forms of fractional ownership in TradFi. What RWA tokenization does is take that concept and, supercharge it using blockchain.
How so? What's the blockchain advantage?
It brings much greater transparency. That immutable ledger again allows for real-time auditing, easy verification,
Okay.
plus programmability. You can build rules right into the token, automated actions, conditional settlements, things like that.
And cutting out the middlemen?
That's a huge part of it. Bypassing many intermediaries, which cuts down on costs and delays.
So taking all that into account, what's the overall market impact look like? Are we talking about a fundamental revolution here?
I think revolutionary isn't too strong a word. It's poised to really shake up asset management and capital markets by unlocking all that capital stuck in illiquid assets, by creating entirely new types of investment products, and, as we said, by democratizing access to high-value assets.
And streamlining the whole process.
Absolutely. Think about it. Distribution, trading, clearing, settlement, all potentially happening on a single layer.
Reduces counterparty risk, I imagine.
Significantly.
Right.
And mobilizes capital much more efficiently. What we might end up seeing are these hybrid financial models.
Blending TradFi and DeFi.
Exactly. The best of both worlds, creating a more interconnected and efficient global financial system.
Okay, but with this kind of rapid change, regulation has got to be a massive piece of the puzzle. How are governments and regulators actually responding? Are they keeping up, embracing it, still hesitant?
It's a really active area. Regulators worldwide are definitely focused on RWA tokenization now. They've moved past just watching towards more structured approaches.
What kind of approaches? Is it consistent globally?
Not entirely consistent, no. You see different strategies. Some places, like Singapore, are basically saying, okay, these tokenized RWAs, they're securities under our existing laws.
Applying current rules. The same risk, same rule idea.
Pretty much. Others are developing brand new frameworks or using these regulatory sandboxes to test things out first.
What about the US, the SEC?
Well, the SEC is looking at an exemption order, which could allow using DLT distributed ledger tech for issuing, trading, and settling securities. That's a potentially significant step.
Acknowledging the technology then.
Yeah. And globally, you have bodies like the Basel Committee on Banking Supervision, the BCBS.
Said international banking standards, right?
Correct. They finalized rules for crypto asset exposure effective January 2026. They basically classified tokenized assets and stablecoins under the existing Basel rules, maybe with some extra risk considerations.
So fitting it into the existing global framework.
And then there's FATF, the Financial Action Task Force. They're focused on the anti-money laundering and counter-terrorist financing side.
AML-CFT.
Right. They continue to stress that those rules apply to virtual assets too. So the regulatory picture is definitely evolving, becoming clearer.
And that clarity is key for adoption.
Absolutely crucial, especially for getting the big traditional institutions fully comfortable and involved in this tokenized world.
Okay, we've painted a picture of huge potential institutional buy-in, evolving regulation. But like any big shift, RWA tokenization isn't without its complexities, its challenges. Our sources actually raise some really interesting critical questions we need to dig into.
Exactly. It's vital we look at those nuances. Things like, several key areas emerge.
Yeah, one big one seems to be this question of democratization versus institutional benefit. Will RWA tokenization genuinely open up access for you, the retail investor? Or is it mainly going to help the big players move money around more efficiently? What are the different takes on that?
That's a great question. And the sources show a bit of a split, actually. Some analyses really emphasize the fractionalization aspect, how it inherently could let smaller investors buy into, say, high-value art or prime real estate.
The dream of owning a piece of a skyscraper.
Kind of, yeah. But other reports are more cautious, suggesting that while that's the potential, the initial phases we're seeing are very much institutionally focused.
Improving interbank stuff, large-scale asset management first.
Precisely. And protecting retail investors in this complex space, that's still very much a work in progress. Regulators are grappling with how to safeguard people given the underlying asset complexities and the tech itself.
So easy access for everyone isn't necessarily guaranteed right out of the gate.
Not guaranteed, no. It's developing.
Okay, and then there's the political and regulatory maze. You mentioned different approaches. The EU has MiCA, their big crypto framework.
Right, markets and crypto assets.
Singapore has its approach. The US is figuring things out. How does cross-border RWA tokenization even work smoothly with all that variation? Seems like a major hurdle.
It is a significant hurdle, definitely. Interoperability, getting these different systems and rules to talk to each other, is a key challenge highlighted in our sources.
So a token issued under EU rules might not easily trade in Asia, for instance.
Potentially, yes, unless there are specific agreements or eventually maybe some kind of international standard emerges. It's complicated.
And what about CBDCs? Central bank digital currencies. Do they fit in, compete, complement?
Another hot topic. Some sources see CBDCs possibly competing with private tokenization, especially for settling large transactions. Others think they could be complementary, providing a stable, government-backed digital currency layer for these tokenized assets to settle on.
Interesting. And that same risk, same rule, regulatory approach you mentioned, does that create friction with what blockchain can uniquely do?
It can, yeah. Trying to fit blockchain's capabilities like automated settlements or complex smart contracts neatly into boxes designed for traditional finance isn't always straightforward. It poses challenges for regulators and innovators alike.
Okay, thinking longer term economically. One concern raised is financial stability. If you suddenly make traditionally illiquid assets super easy to trade, could that actually increase volatility or instability?
That's a very valid concern some analyses point to. If large amounts of, say, real estate value become instantly tradable like stocks, does that introduce new systemic risks without the right safeguards? It's something regulators are watching.
And what about the impact on the traditional markets themselves, like the existing real estate market or bond markets, if value moves onto the blockchain?
Right, what happens then? Some predict significant disruption, maybe disintermediation of current players. Others see more of a hybrid future where traditional finance adopts and integrates tokenization.
And could it shift global capital flows? Maybe change which financial centers are dominant?
That's debated too. Could regions with clearer regulations or better tech infrastructure become new hubs for tokenized assets? It's certainly possible.
Now let's touch on ethics and risks. Data privacy is a big one. If your ownership of a real-world asset is on a blockchain, especially a public one, what about your privacy?
A critical point. Our sources stress this. Public blockchains offer transparency, but maybe too much for sensitive ownership data.
So what are the solutions? Permissioned blockchains.
Permission ledgers, where access is controlled, are one option. Also, privacy-enhancing tech like zero-knowledge proofs are being explored ways to verify ownership without revealing all the details.
Beyond privacy, what about other risks? Market manipulation, fraud, rug pulls?
Those are definite risks, especially with newer or more complex asset types being tokenized. Mitigation involves things like thorough smart contract audits, strong regulatory oversight, and just clear legal frameworks so people know their rights.
And enforcing those rights. If there's a dispute about a tokenized asset, especially across borders.
Huge legal complexity there. Which jurisdictions' laws apply? How do you enforce a judgment? These are knotty problems still being worked out.
Okay, last area, investment strategy. For you listening, if you're considering investing in these tokenized assets, what kind of due diligence is needed? Is it just the usual financial checks?
Sources suggest it goes beyond that. You need to look at the traditional financial metrics, of course, but also the tech side.
Like the blockchain it's built on, the smart contract.
Exactly. Is the blockchain secure? Has the smart contract been audited properly? And crucially, what's the legal status of this token in your specific location? Does it clearly represent ownership?
And for professional portfolio managers, how do they fit these into a strategy?
Well, they need to figure out the unique risk-reward profile. How does a tokenized real estate fraction behave compared to a traditional REIT, for example? How does it fit into a diversified portfolio?
And is technology like AI going to play a role here?
Very likely, yes. Sources Project AI platforms will become important for analyzing these complex investments, assessing both the real-world legal aspects and the blockchain mechanics. That AI-blockchain intersection is definitely one to watch.
Wow, okay. So we've covered a massive amount today, from the basics of RWA tokenization and its incredible growth.
Yeah, the sheer scale and the institutional interest.
To the benefits, the market impact, the tricky regulatory questions, and all these critical considerations around risk, ethics, and investment. It's clear this has enormous potential to really change how we view and handle assets.
Absolutely. If you connect it to the bigger picture, this isn't just a minor tweak. It's fundamentally altering that boundary between traditional finance and DeFi.
A structural shift, you called it.
Yeah, changing how value is represented, how it's moved, how it's managed globally. The goal is a more efficient, maybe more accessible financial system for everyone.
Indeed. So maybe a final thought for you to ponder. Consider how your own assets, maybe even everyday things, might one day be represented as tokens. Or just think about how this tech could reshape global value exchange in the next few years.
It's moving fast, definitely worth keeping an eye on.
Absolutely. Keep learning, keep exploring. This deep dive is really just scratching the surface. Thanks so much for joining us.